Okay, before we get into everything, let me hit you with this. Two completely different companies, one from Paris and one with a cross-border VC team, just made moves that could seriously reshape the CRM and AI startup game over the next few years. One pulled in over €500 million to go head-to-head with giants like Salesforce and HubSpot. The other just dropped a fresh $700 million fund while refusing to follow the all AI everything crowd. Both are swinging big, and honestly, the numbers behind these moves are kinda wild. Alright, let's break it all down. So first up, Brevo. And yeah, a lot of folks still slip and call them Sendinblue, because that's the name they built their early reputation on back in 2012. At that point, they were a pretty straightforward email marketing solution targeted mainly at small businesses, basically running right alongside players like MailChimp. But over time, they went from just email to a full marketing and CRM platform, then shifted their whole positioning toward mid-market customers and eventually changed the name to Brevo to make their broader product scope obvious. Turns out, the rebrand wasn't just for show, because now they're officially a unicorn. They just locked in €500 million in fresh equity funding. That's around $583 million that pushed their valuation over the $1 billion line. The timing is intentional because they're gearing up to compete not just across Europe, but directly in the US against heavyweight CRM names like HubSpot and Salesforce. The company's got more than 600,000 customers now, which is a huge jump from those early small biz days. And it's not just indie shop owners. Carrefour, eBay, and H&M are all on their client list. The interesting thing is how much of their revenue currently comes from the US right now. It's only about 15%. Even though the US is one of their top 3 markets alongside France and Germany. But the CEO, Armand Thiberge, straight up said that's nowhere near where he wants it. In his view, if the US represents roughly 50% of the global market, then it should eventually represent 50% of Brevo's revenue. That's why part of that huge new funding round is already earmarked for an aggressive US expansion, with more than €100 million planned for that push alone. But the growth story gets even better. In 2023, they joined the Centaur Club, which means crossing the $100 million line, and they already hit their 2025 goal of surpassing €200 million in ARR ahead of schedule. Now they're publicly aiming at €1 billion in ARR by 2030. Sure, Salesforce is still in another league entirely. Retargeting over $41 billion in revenue for 2026. Brevo isn't trying to frame this as Europe versus the US. They just keep repeating that product. Excellence wins markets. If you build the most complete product that's also the easiest to use, you win. Brevo has about 1,000 employees at this point, and they claim they've kept a double-digit EBITDA margin even while scaling and acquiring companies. They've already made 11 acquisitions, and they expect those deals to represent 45% of the revenue they want to achieve by 2030. Plus, they've committed €50 million toward AI over a 5-year period. And with this huge new funding round, they plan to keep pushing both the acquisition strategy and their AI roadmap. The cap table after this round is pretty interesting because there were rumors going around that Brevo was being acquired, but that's not what happened. Thiberge explained that management and employees still hold the largest single share at 26%. Then the 2 new major backers, General Atlantic and Oakley Capital, each bought 25%. Existing investors, Bpifrance and Bridgepoint, together kept 24%. And Partech, which originally led Brevo's Series A years ago, completed its full exit. So instead of a sale, it ended up looking like a global investor mix that matches Brevo's stated ambition to build a European company that can actually compete at a global scale based on product quality rather than leaning on a narrative of European digital sovereignty. If you look at their platform, the expansion beyond email is obvious. They still compete with MailChimp on email, but they've layered on marketing automation, a full CRM, customer data management, and multi-channel communication through email, SMS, WhatsApp, live chat, push notifications, and even integrated sales calls. And a lot of those features are increasingly AI-powered, either through in-house tech or integrations. Serving tiny businesses and mid-market companies at the same time naturally creates tension around complexity versus simplicity, and Thiberge openly acknowledges that. But the model has worked well so far, which is why they're confident enough to target that billion-euro ARR number. Now let's jump to Nexus Venture Partners, because the way they repositioning their new fund is kind of the opposite vibe from the everyone chase AI approach that's happening across most of the VC world right now. They just launched a $700 million fund, the same size as their previous one, and instead of pouring everything into AI startups, they're intentionally splitting their attention between AI and India-focused startups in consumer, fintech, logistics, and digital infrastructure. Nexus has been around since 2006, headquartered in Delaware, but operating as a single, unified US-India team across Menlo Park, Mumbai, and Bengaluru. They don't run separate regional funds. Everything they do comes from the same pool of capital. That structure is part of the reason they've had success picking winners in both the US and India. Right now, they manage $3.2 billion across all funds and have invested in more than 130 companies, with over 30 exits, including a number of IPOs, under their belt. On the US side of things, Nexus has been early in companies like Postman, Apollo, Minio, Giga, and Firecrawl. All of these have become super important in the developer tooling and AI infrastructure world. They're the kinds of companies developers rely on every single day, even if they're not flashy brands outside of engineering circles. On the India side, Nexus has backed companies like Zepto, Elhivery, Rapido, Turtlemint, and Infra. Market major players across consumer, logistics, fintech, and digital infrastructure. And they keeping this dual-end strategy with the new fund instead of doing what a lot of firms are doing, which is going all-in on AI, whether it fits their original strength or not. One of the managing partners, Jishnu Bhattacharjee, explained that AI is obviously a massive technological shift, and they're anchoring their strategy around it. But he also made the point that crowding into a single, overheated category can be risky for returns. So for them, the balance comes from leaning into India's digital economy, which is still expanding and has a range of opportunities outside the AI hype cycle. They've always believed in finding early-stage companies from inception to seed to Series A, which is why their initial checks are often only a few $100,000 or around $1 million. It's a very long horizon, early-stage heavy approach. Another managing partner, Abhishek Sharma, added that the reason they kept the fund size at $700 million, again matching Fund 7 from 2023's, because they found that size to be the sweet spot for early-stage work. They raise every 2.5 to 3 years, and they didn't want to inflate the fund just because they could. Most of the LPs in this new fund are returning investors. And those LPs come from all over the US, Europe, the Middle East, Southeast Asia, and Japan. What Nexus finds really compelling right now is that India's AI trajectory isn't as far along as the US in many areas. But the country might actually leapfrog in certain parts of the ecosystem. India has this combination of a massive talent pool, rapidly expanding digital infrastructure, and a huge demand for localized AI models that work across many languages and handle data sovereignty needs. They pointed to Zepto as an example of how AI is already redefining operations in Indian consumer companies. At Zepto, AI plays a role in everything: customer support, routing, fulfillment, basically the entire backend of the quick commerce model. And then there's NASA, which is building domestic AI infrastructure designed for India's needs around sovereign AI workloads and multilingual support. So Nexus is basically betting that the combination of global AI innovation and India's rising digital markets will keep creating a steady flow of opportunities at the early stage. And they're sticking to their long-term formula instead of being swept up in the hype. Between Brevo going full throttle with over €500 million to challenge US CRM giants, and Nexus doubling down on a balanced cross-border strategy with a fresh $700 million fund, the startup landscape feels like it's shifting into a much more global, multi-market competition. Everyone's reaching beyond their borders now. And those who stay focused on long-term strategy instead of short-term hype might end up defining the next decade. All right, that wraps things up. If you enjoyed the breakdown, kindly hit the like button and subscribe to the channel. It really helps out. Thanks for watching.